I want to show you something that's happening right now in the UAE real estate market. Something that a small group of investors discovered only 3 years ago, while everyone else was focused on Dubai, where prices doubled and entry barriers get higher and higher. These investors quietly positioned themselves in a market 60 kilometers away from Dubai. And here is what happened. They bought off-plan properties for around $105,000. Today, those exact same properties are worth around $185,000. That's 70% total growth in just 3 years. But here is what makes this interesting. This isn't about one lucky deal. This is about an entire market that has been systematically underpriced. While the world was watching Dubai, this market was quietly preparing for something much bigger. And now that catalyst has arrived. Let me ask you something. When was the last time you found a real estate opportunity where entry prices were still accessible, returns were outpacing Dubai, and global developers were just starting to pay attention? If you are like most investors, the answer is never. Because here is what usually happens. By the time you hear about an opportunity, it's already expensive. By the time you see the proof, the early gains are gone. And by the time you're ready to invest, you're competing with the institutional money that's driving prices even higher. That's exactly what happened in Dubai. 20 years ago, you could buy beachfront property for a fraction of today's prices. 10 years ago, there were still opportunities. But what about today? Entry prices have become a barrier for most individual investors. And here's the real problem. You know this pattern exists. You've seen it before. But every time you try to position yourself early, you second guess the opportunity because it hasn't been validated yet. So you wait, you watch, and by the time the market validates the opportunity, you've missed the window. That's a cycle most investors are trapped in. But what if I told you there is a way to break that cycle? Yes, you heard it right. What if you could identify the catalyst before the market fully priced it in? Let me show you how this works. 3 years ago, a small group of investors identified something unusual in Ras Al Khaimah. They noticed 3 things. First, entry prices on Al Marjan Island were 40–50% lower than comparable beachfront properties in Dubai. Second, global developers like MR and Damak were quietly launching projects in the area. Third, and this is the key, they learned that Wynn Resort was planning something massive. Not just another hotel, not just another resort, but a $5 billion integrated resort within the UAE's first casino. Now, here is why this matters. When Wynn opens a resort, something predictable happens. They did in Las Vegas, they did in Macau, we've seen it, and they did in Boston Harbor. Every single time Wynn enters a market, visitations explodes. In Macau, visitation grew 40% in the first year, then another 12%, 18%, and 23% in the following years. In Las Vegas, they generated 12.6 million visitors and became the #1 revenue generator in the city. So when Wynn announced their $5 billion investment in Marjan Island, this investor knew exactly what was coming. They positioned themselves before the announcement went public. And here's what happened. Studio apartments that were selling for around $105,000 in 2022 are now worth around $185,000. That's 70% growth in 3 years, roughly 20% returns per year. But those are just the studio apartments in one small tiny project. Let me show you the real case studies. One of our investors purchased an off-plan unit in MR address residences on Marjan Island, Ras Al Khaimah, and the purchase price was $436. They resold it just recently for $518,000. That's around $82,000 in profit in less than only 12 months. Another investor bought in Damak shoreline, same location, and the purchase price $490,000. Sold for $572,000. Another $82,000 in capital gains. Now, these aren't isolated cases. The entire Ras Al Khaimah market has been experiencing this kind of growth. Every location, every project. And there is a very specific reason why. According to a study by Colliers, when Wynn opens the door in 2027, Ras Al Khaimah will see 3.8 million visitors, overnight visitors. That's a 28% annual growth rate from 2022. By 2030, they're projecting 5.5 million visitors. And again, it's overnight stayers. And here's what that means for real estate market. The same study identified a market gap of 5,955 hotel keys by 2030 on top of the existing supply. On top of the Wynn's development, an additional 45,000 residential units will be needed to accommodate the population growth. Now, let me put this in perspective. When demand outpaces supply by this magnitude, prices don't just increase incrementally, they surge. And that's exactly what we're seeing in the market right now. But here is what most investors don't understand. This isn't just about real estate appreciation. This is about positioning yourself in a market that's about to transform. Let me explain. When Wynn opens, they are not just bringing tourists. They're bringing an entire ecosystem. According to a study by EY, Wynn's impact will add 30.7% to Ras Al Khaimah's GDP. That's a 3.68 billion recurring annual impact. Just think one more time. 3.68 billion US dollars. They will create 7,339 direct jobs in Tier 1 operation. Another 6,947 jobs in Tier 2 supporting industries. The population of Ras Al Khaimah is projected to grow from 400,000 today to over 524,000 by 2030. Now, think about what this means. More jobs means more residents. More residents means more demand for housing. More tourists means more demand for hospitality and retail. And all of this happening in a market where development costs are 10% lower than the regional average, where foreign investors can own 100% of their property, where there's a 0% personal tax, and where you can get a long-term residency through investment. This is why institutional investors are paying attention. This is why MR, Damak, and other global developers are launching their projects in Ras Al Khaimah. And this is why the window is still open for individual investors who understand what's happening right here, right now. But there is something important you need to know. The opportunity in Ras Al Khaimah isn't just a random thing. It's a systematic, and it follows a very specific pattern that we've seen already in every emerging market. Let's talk about the phases. And as a phase one, we can mention that the catalyst, major anchor development, is announced. Early investors position themselves. Prices begin to adjust, but the market hasn't fully priced in the impact yet. And the phase two, the validation, 2025, 2027. Construction progresses visibly. Additional developments are announced. Media coverage increase. Prices accelerate as more investors recognize the opportunity. And the phase three is the maturation from 2027 to 2030. The anchor projects open. Visitations explodes. The market reached its new pricing equilibrium. Early investors realize their gains. It's already fact. Now, here's a critical insight. We're currently in a phase one, transitioning from phase one into phase two. The catalyst has been announced. Constructions is underway, but the market hasn't fully priced in the impact yet. That's the window we talked about earlier. Once Wynn opens and visitation numbers validate the projections, the market will reprice instantly. Believe me, it will reprice. By then, the 105,000 US dollar studio apartments will be a memory. The 436,000 US dollar opportunities will be gone. And the investors who position themselves early will be looking at equity IRRs of 35% to 50% on residential assets. That's not speculation. That's the projected return from the investment analysis. Now, I know what you might be thinking. This sounds great, but how do I know if this is the right time? What if I'm too late? What if the market doesn't perform as expected? These are the right questions to ask. And here is how I look at it. First, the timing question. When Wynn commits $5 billion to a market, they're not speculating. They have done extensive feasibility studies. They have analyzed visitation patterns. They have validated the demand. Their track record in Las Vegas, Macau, and Boston speaks for itself. Second, the too late concern. In 2022, those studios apartments were 105,000. Today, they are 185,000. That's 75% growth already realized. But according to every projection, we're still in an early phase. The real acceleration happens when the Wynn opens in 2027 and the visitation numbers materialize. Third, the risk question. No investment is without risk, but here is what we know. The market has already demonstrated 20% annual returns. Global developers are committing hundreds of millions in the new projects. The government has created a favorable tax and ownership structure, and the infrastructure is already in place. The question isn't whether Ras Al Khaimah will grow. The question is, will you be positioned to benefit from that growth? Now, here is the most important thing I need to tell you. And it's actually a question. A question that's going to determine where you go in this market, how far you'll go, and most importantly, how fast you'll get there. The question is, what if I and you could trade the places? You see, there are two paths you can take from there. The hard path is trying to figure this out on your own, researching every developer in the area, comparing every project, trying to time the market perfectly, making mistakes with your capital while you learn. That's the path most investors take. And here's what happens. By the time you feel confident enough to move, the opportunity has shifted. The 105K studios are now 185. The early phase pricing is gone, and you're back to competing with the institutional money. That's the hard path. But there's an easy path. The easy path is seeing exactly which units are available right now in the market at early phase pricings in the projects that are positioned to capture the Wynn effect before the next price adjustment happens. And this is very important. That's what I'm offering you today. Right now, I have access to specific inventory in Ras Al Khaimah that fits the exact profile of the investment that generated those $82,000 profits. These aren't just random units. These are strategically selected properties in MR developments on Marjan Island, Damak projects with beachfront access, and selected opportunities in areas that will directly benefit from the Wynn Resort opening. But here is what you need to know. The inventory doesn't stay available. Last month, I showed investors 47 units that fit our investment criteria. Today, I have only 23. Not because the market is slowing down, because investors who understand the timing are moving fast. Every week, units that were available at early phase pricing get allocated, get sold, and once they're gone, the next release comes at a higher price point. Believe me, that's 100% fact over here. The developers release the inventory in tranches. Early investors get the best pricing, of course. Then the price adjusts. Then the next group of investors comes in at the new price. The investors capturing $82,000 profits now, they bought it in an early stage, 12, 18 months ago. And right now, I can show you what's available today. Not last month inventory, not next month pricing. Today's available units at today's pricing. So here is what happens next. Below this video, you'll see a button to schedule 20-minute inventory review with me. This isn't sales pitch. This isn't a generic consultation. This is me sharing my screen and walking you through exact units that are available right now. You'll see the exact project name and location on the map, the unit layouts and specifications, the current pricing compared to similar units that have already appreciated, the payment plan structure, and how it maximizes your capital efficiency, and the projected delivery timeline. I'll show you which units are in the Phase 1 projects where the early pricing is still available, which ones are in Phase 2 where pricing has already started to adjust but there is still upside. And I'll explain why certain units make more sense than others based on the win impact radius. The same review I did with investors who secured those $82,000 profits. But here's the critical part. What I show you on Monday might not be available by Friday. Not because I'm creating false scarcity, but because this is how off-plan markets work. Inventory moves, pricing adjusts, and the window shifts. The call is 20 minutes. You'll see everything that's available right now. You'll understand exactly why certain opportunities fit the early phase profile. And then you decide if you want to move forward. No pressure, no obligation, just me showing you the exact map that the early investors use to capture those returns. Because here's the truth. 3 years from now, you're going to look back at the units I'm about to show you the same way investors today look back in 2022. The only question is, will you have secured your position? Or will you be watching the next wave of case studies, wishing you had taken the call when you had the chance? Click below to schedule your inventory review. Let's make sure you see what's available before it's gone.